When it comes to investing, most of us ask the same questions. Where do I even begin? Which option is right for me? The truth is, there's no single path. Different models work for different people, depending on your goals, your risk tolerance, and your patience. What matters most is knowing the strengths and weaknesses of each model and making informed decisions rather than jumping in blindly because a friend told you or because everyone else is doing it. Today, we'll explore proven investment models, index funds, ETFs, mutual funds, dollar cost averaging, dividend stocks, and of course, cryptocurrency. We'll cover their pros and cons, highlight the unique advantage of crypto, and help you understand which model might fit your style best. Let's start with index funds and ETFs, the quiet giants of the investing world. Think of them like a basket filled with all kinds of fruits from the market. Instead of buying a single apple, say one stock, you get the whole basket, a portfolio of stocks. If one apple goes bad, it doesn't spoil your entire basket. Advantage: diversification without needing to pick winners and losers. Low fees compared to active investing. ETFs in particular are easy to trade, like stocks, making them very flexible. Disadvantage: while safer than betting on single stocks, they won't deliver the wild upside of a moonshot company. You're tied to the overall market performance. If the market sinks, your basket sinks too. Still, for beginners, index funds and ETFs are like training wheels. Stable, balanced, and much harder to crash. Now imagine, instead of buying that fruit basket yourself, you hire a professional shopper. That's essentially what a mutual fund does. A fund manager picks the mix of stocks and bonds for you. Advantage: hands-off investing. Professionals handle the buying and selling. Access to specialized strategies and niches. Disadvantage: higher fees. Those professional shoppers don't work for free. Many funds underperform the overall market over time. It's like paying extra for a personal trainer who may or may not help you outperform your solo workouts. Some people love the guidance. Others realize the cost outweighs the gain. Next up, dollar cost averaging, DCA. Instead of throwing all your money in at once, you invest a fixed amount at regular intervals, weekly, monthly, or quarterly. It's like buying train tickets regularly. Sometimes the price is higher, sometimes lower, but over time, you smooth out the ride. Advantage: reduces the stress of trying to time the market, builds discipline. Investing becomes a habit, not an impulse. Disadvantage: in a consistently rising market, lump sum investing often beats DCA because you delay putting all your money to work. Requires patience. It's not about quick gains, but steady growth. DCA is perfect for people who want investing to feel like brushing their teeth. Automatic, consistent, and essential. Now let's talk about dividend stocks. Imagine owning a vending machine that not only grows in value, but also sends you cash every month. That's what dividend-paying companies do. They share profits with investors. Advantage: regular income stream, even in volatile markets. Some of the most stable established companies pay dividends. Disadvantage: dividend stocks often grow slower than high-flying growth stocks. Not all dividends are safe. Companies can cut them when times get tough. Think of dividend stocks as the cash flow parents of the investing family. Reliable, steady, but maybe not the most exciting. By the way, before we dive deeper into the fascinating role of the investment model, there's a platform I think you'll find pretty interesting, and I wanted to share it with you guys. Unique OTC Exchange was created with a simple idea: to bring transparency and security to crypto OTC trading. The entire platform is built on smart contracts, meaning you can trade without worrying about the risks or scams that are all too common in traditional OTC deals, especially with pre-TGE tokens. And the results are impressive. Over $1 billion in on-chain trading volume, more than $20 million in revenue, over 5 million users, and multiple times holding the #1 spot in pre-market trading, even surpassing major CEX's Doodles or Pump.Fun. Each of them reached up to $20 million on Unic. Of course, this isn't financial advice. If you're interested, do your own research. I've left a detailed link right below. Now let's continue exploring how crypto stacks up against other models of investing. And now the wild card, cryptocurrency. Bitcoin, Ethereum, and altcoins like XRP or WLFI are not just currencies. They're experiments in what money and technology can become. Advantage: decentralized, borderless, and resistant to inflation. High potential returns. Some altcoins have multiplied in value within months. Innovative ecosystems, from smart contracts to NFTs, like Pudgy Penguins, redefining ownership and digital assets. Disadvantage: extreme volatility. Fortunes can be made and lost overnight. Regulatory uncertainty in many countries. Security risks, scams, and technological complexity. But here's the key advantage. While traditional assets are tied to central banks and governments, crypto exists on blockchain. Transparent, scarce, and innovative. That makes it not just an investment, but a bet on the future of finance itself. So which of these models actually makes sense for you? If you're the kind of person who values stability and minimal effort, index funds and ETFs are an excellent starting point. You get diversification, low fees, and peace of mind. Or if you prefer to let professionals take the wheel, you might lean toward mutual funds. But be prepared to pay more in fees, and remember that higher cost doesn't guarantee better results. If you like discipline and slow but steady growth, dollar cost averaging might be your style. It's less about timing the market and more about building a consistent habit. Or if you love the idea of building cash flow alongside long-term growth, dividend stocks could suit you. They're like having a portfolio that pays rent each quarter. And if you're willing to embrace innovation and risk, cryptocurrency may capture your imagination. It's not for the faint of heart, but for those who see the future of blockchain, it's a frontier worth exploring. But here's the golden rule. Avoid going all in on a single model. Don't rush into decisions because everyone is doing it, or because a friend gave you a hot tip. Equip yourself with skills, knowledge, and patience. Balance is the real secret to growing wealth faster and safer. So where does that leave us? If you're starting out, index funds or ETFs might be your training wheels. If you crave income, dividend stocks might suit you. And if you're ready for innovation, willing to stomach the risk, then crypto might just be the frontier to explore. And speaking of exploring that frontier, Unic has recently launched their public token sale, the Unic IDO, as part of their token generation event. The goal is to raise funds through $100 million UN tokens, starting at 15 cents and gradually rising as supply decreases. Early participants are rewarded for joining sooner rather than later. Check out the link below to dive in if this caught your interest. Just sharing info, not advice. Always research before making decisions. Investing is a journey, not a race. Some paths are smooth, some are rocky, and some, like blockchain and crypto, are still being paved. But every step you take brings you closer to financial literacy, independence, and maybe even freedom. So tell me, which model feels right for you? Drop your thoughts in the comments, and don't forget to like, subscribe, and share this with someone who's ready to start their investing journey. Because the best time to plant a tree was 20 years ago. The second best time? It's today.